Bitcoin just did something it hasn't done in 847 days. The world's leading cryptocurrency has broken through a critical resistance level that has held firm since early 2023, and what happens next could redefine wealth creation in the digital age. If you're holding Bitcoin, thinking about buying, or just curious about where this market is headed, the next 12 minutes might be the most important crypto content you watch this year. 847 days. But here's where it gets interesting. Every major Bitcoin analyst, from Plan B to Willy Woo, is pointing to the same conclusion: $100,000 isn't the destination, it's just a pit stop on the highway to much bigger numbers. And the data backing this up isn't hopium or wishful thinking, it's cold, hard on-chain metrics that have predicted every major Bitcoin move for the past decade. The 847-day pattern explained. Let's rewind and understand what just happened. For 847 days, Bitcoin has been locked in what traders call a reaccumulation phase. Think of it like a coiled spring, compressed tighter and tighter by institutional buyers quietly stacking sats while retail investors were distracted by bear market fear. This wasn't random price action, this was a textbook Wyckoff distribution pattern playing out in slow motion, and it just reached its explosive conclusion. During this 847-day period, smart money accumulated Bitcoin at an unprecedented rate while price remained relatively stable. The data tells the complete story. The numbers are staggering. BlackRock's Bitcoin ETF has absorbed over $34 billion in just 10 months. Exchange reserves have dropped to their lowest level since 2018, meaning less Bitcoin available to sell. Meanwhile, institutional ownership has skyrocketed to 78% of all Bitcoin held by entities managing over $100 million. This isn't retail FOMO, this is calculated institutional accumulation. So why are analysts so confident that $100,000 is just the beginning? It comes down to three fundamental catalysts that are converging right now in a way we've never seen before. First, the halving effect is just starting to kick in. Second, institutional adoption has reached a tipping point. And third, macroeconomic conditions are creating the perfect storm for Bitcoin's next parabolic run. Let's examine the historical halving cycles. Every single time Bitcoin supply issuance gets cut in half, we've seen massive price appreciation exactly 12 to 18 months later. We're currently 6 months post-halving, right in the sweet spot where previous cycles went parabolic. The difference between this cycle and previous ones is stark. We've evolved from a retail-dominated market to an institutional powerhouse with unprecedented infrastructure and legitimacy. The price targets for 2025. Now let's talk numbers. Based on on-chain data, historical patterns, and institutional flow analysis, here are the realistic price targets for Bitcoin throughout 2025. And I'm not pulling these out of thin air, each target is based on specific technical and fundamental indicators that have proven accurate in previous cycles. Bitcoin's journey to new all-time highs will likely follow these key milestones throughout 2025. Each level represents a significant psychological and technical barrier that, once broken, opens the door to the next target. Quote, "The current Bitcoin cycle has all the hallmarks of a super cycle. We're seeing institutional adoption at levels that would have seemed impossible just 5 years ago. $100,000 is inevitable, and $200,000 is probable." Michael Saylor, MicroStrategy CEO. Major events that could accelerate Bitcoin's rise. Bitcoin ETF options launching in early 2025, bringing massive derivative liquidity. Corporate treasury adoption following MicroStrategy's playbook. Sovereign nation accumulation programs expanding beyond El Salvador. Lightning Network scaling enabling mainstream payments. Institutional custody solutions reaching maturity. Traditional finance integration deepening across all sectors. Let's look at the institutional players who are driving this market transformation. These aren't crypto-native companies, these are traditional finance giants with trillions under management who are now committed to Bitcoin. $2.8 trillion in institutional capital waiting on the sidelines. The technical analysis. From a technical perspective, Bitcoin is displaying textbook bullish indicators across multiple time frames. The weekly chart shows a perfect cup and handle formation, the daily is printing higher highs and higher lows, and the 4-hour is maintaining a strong uptrend with healthy consolidation periods. Even the fear and greed index has shifted from extreme fear to optimistic greed, exactly what we want to see in the early stages of a bull market. Multiple technical indicators are aligning in a way we haven't seen since the 2020 bull run began. These aren't lagging indicators, they're forward-looking metrics that have historically preceded major moves. Coming in at number 3 on our list of bullish on-chain metrics is the exchange reserve ratio. This metric tracks what percentage of Bitcoin supply is sitting on exchanges available to be sold. Currently, we're at the lowest level since 2018, meaning long-term holders are pulling their coins off exchanges and into cold storage. This is classic pre-bull run behavior. At number 2, we have the MVRV score, which measures the ratio between market value and realized value. This indicator has successfully called every Bitcoin cycle top and bottom since 2011. Right now, it's signaling we're in the early stages of a bull market, with plenty of room to run before reaching overheated territory. History suggests we have 12 to 18 months of upside ahead. And the number 1 most bullish on-chain metric? The realized cap HODL waves. This shows that long-term holders who've held Bitcoin for over 1 year now control 76% of the supply, the highest percentage in Bitcoin's history. These aren't weak hands ready to sell at the first sign of profit. These are diamond hands who understand Bitcoin's long-term value proposition. This creates a supply squeeze that could send prices exponential. The macro picture. Beyond Bitcoin-specific metrics, the macro environment is aligning perfectly for risk assets, especially scarce digital assets like Bitcoin. Central banks are pivoting from aggressive rate hikes to rate stability and eventual cuts. The dollar is showing signs of weakness. Inflation remains persistent, driving investors toward hard assets. And geopolitical uncertainty is pushing more people to seek censorship-resistant, borderless money. Bitcoin was literally designed for this moment. The global liquidity picture tells the story perfectly. M2 money supply is expanding again after a brief contraction. Real interest rates are still negative in many developed nations. Currency debasement continues at record pace. And Bitcoin adoption is accelerating in emerging markets where people need it most. These aren't abstract concepts, they're the fundamental drivers pushing Bitcoin higher. Now let's be realistic. Bitcoin's path to $200,000 plus won't be a straight line. There are legitimate headwinds and resistance levels we need to acknowledge. Regulatory uncertainty remains in certain jurisdictions. Profit-taking will occur at psychological levels like $100,000, $150,000, and $200,000. Macroeconomic surprises could temporarily derail the trend. And technical corrections are healthy and expected in any bull market. Understanding both the bullish case and the bear case is crucial for any investor. Here's how the two scenarios stack up against each other based on current data and historical patterns. The key difference between seasoned Bitcoin investors and newcomers is understanding volatility. A 30% correction in Bitcoin is like a 3% pullback in traditional markets. It's not a crisis, it's an opportunity to accumulate. The investors who panic sell during these corrections are the ones who miss the generational wealth creation that follows. Diamond hands are forged in the fire of volatility. Strategic considerations. Smart strategies for navigating Bitcoin's bull run. Dollar cost averaging remains the most proven strategy for long-term accumulation. Taking profits in tranches at predetermined levels locks in gains. Never invest more than you can afford to lose completely. Hardware wallet security is non-negotiable for large holdings. Understanding tax implications before making moves. Ignoring short-term noise and focusing on long-term fundamentals. Quote, Bitcoin is the best performing asset of the last decade, and it will likely be the best performing asset of the next decade. The question isn't if it goes higher, it's how high it can go. Cathie Wood, ARK Invest. Time in the market, timing the market alarm clock. Final thoughts. So where does this leave us? Bitcoin breaking through its 847-day resistance isn't just a technical event, it's the starting gun for what could be the most explosive crypto bull run we've seen yet. The confluence of institutional adoption, supply dynamics, macro tailwinds, and historical cycle patterns all point to significantly higher prices throughout 2025. While $100,000 will be a celebration, the smart money is already positioning for $150,000, $200,000, and beyond. Here's what the data suggests for Bitcoin's 2025 journey. These aren't guarantees, but they're educated projections based on the best available information and historical precedent. Remember, this analysis is educational content, not financial advice. Do your own research, understand the risks, and never invest more than you can afford to lose. Bitcoin's volatility is both its greatest risk and its greatest opportunity. But if history is any guide, those who stay patient, accumulate strategically, and hold through the turbulence are the ones who capture life-changing returns. The question isn't whether Bitcoin will go higher, it's whether you'll be positioned to benefit when it does. I'm Eric from CoinPulse, reminding you to feel the market beat. See you in the next video where we'll break down the top altcoins to watch in 2025. Until then, stay curious, stay informed, and stay bullish. Peace out, Crypto fam. CoinPulse, feel the market beat.